Dave from JKP Holdings. Nathan Turner, how are you, man?
Very, very good.
You're a whole lot better now.
Yeah.
We'll go from there. So we wanted to kind of break down some deals. We didn't get as many as I hoped for investors called Zero. So we're going to break down our own deals. I have this recorded. It'll go on YouTube and everything else. And we wanted to show you guys how we see deals, how we look at things, which probably a little differently how you do it. So I'm going to see if I can get the crowd in here. We have about 25 people live at that point, and see if we can get them back in here and whatnot. Hopefully the sound should be perfect. You're direct LinkedIn and go from there. So Nathan, when you get a tape, how do you narrow that down? Do you go by states? How do you narrow down your list?
So the very, very first thing I do is I look at states. So there are, when in fact, when I go out and buy notes, if I'm going and approaching a new seller, they'll say, what are you looking for? And I usually just say I buy nationwide, which is mostly true. But there are some states that I don't like. I don't like New York and New Jersey. I'm not a big fan of Maine, Rhode Island, Connecticut, Massachusetts. Kind of that whole New England area is really not
good. Northeast is not a fun area.
It's not a lot of fun. And the reason is because I'm always looking at worst case scenario, which is a foreclosure. And if it needs to go to a foreclosure, those are some very difficult states to get foreclosures done. And so, and you know what I learned by experience as well, Hawaii sounds all glamorous and cool. Man, you get caught in a foreclosure and it just drags on forever.
Yeah.
Ask me how I know.
So we go by state, right? We filter out the states we don't like. And then what we do from there is we kind of say, why do we not like the states? Is it the state illegal? Is it state because of debt licenses? Is it state because of cost, expenses, those kind of things? Where is it that it's an issue?
And foreclosure is very, very first thing, foreclosure laws and time. But you're right, things like licensing. So for example, Georgia, I actually don't buy in Georgia. I love the laws that they have there as in terms of foreclosure, but I don't have a license there and I don't anticipate getting one. And so it's just because it's difficult and it's an extra layer.
So those who don't know, Georgia has a law of 5 assets, and usually it's in your individual name. And if you're a company, and if they catch you, right, it becomes a situation where you can it's a felony. So it's a big deal. Something I veer away from myself.
Yeah, me too. So I steer clear.
Yeah. So let's dive into what we look at. Very similar numbers, right? One of the first things we look at is states for us. Kentucky, $4,000 plus a year debt license. I'm not bothering.
No.
Northeast, I will look into New Jersey. I'm now avoiding PA, New York up pretty much. Some parts of New York I'll entertain. Northwest areas, not the boroughs.
And you know what? After our interview a couple of months back, I am actually now looking at New York, but with a couple of caveats. Like for number one, there can't be a foreclosure already started.
Yes,
if there's a foreclosure already started, I'm out. But it's on my radar now at least. And you know what? Only because we did this interview with great
attorneys,
taught us some things. Yeah.
So if you haven't seen it, definitely YouTube it and check it out.
Yeah. So New York is back, at least on the radar.
Yes.
At least on the radar.
Yeah. So there's some quick foreclosures. As long as you're not in that state, you can do things to expedite the process. So for us, the next pillar for me is I don't want any asset with a property value below 50,000 or above 300. Reasons is if I'm going to do any kind of kitchen work or foreclosure work, and it's going to cost me $5,000 or $6,000, $7,000, the value of the property means nothing. In terms of foreclosure, it's flat across the board. And you could probably do the quick math, $5,000 on a $50,000 asset, 10%. So I'm losing it like that. So the lower price assets is something we aren't attracted to. The reason we don't do above 300,000 is the person typically is more experienced, they have more money, they have more abilities check out things. So we kind of avoid that issue of dealing with some sophisticated borrowers,
Yeah.
right? So and you can check out the New York laws, which isn't strictly for New York, but on our YouTube channel, which this will also be on. So there are some pillars that are coming about, but you also have the debt license side of it, which you have to make sure you're aware of.
Right.
You can watch our huge debt license video as well on YouTube, which is really intriguing, and it's not a clear-cut answer.
Right.
But we would like to narrow down the list of what states we are comfortable with. I'm about 14 or so, a little bit more than that, but we primarily look for those kind of things. The next pillar we look at, for me, is either a first or second or CFD, right? If it's a second lien, unless it's performing, I'm gonna pull it out. And just because a tape says performing doesn't mean it's performing, right? Except
Just
for
because the tape
caveat
says-
that Nathan caught, right?
Well, yeah, and just because the tape says a particular value, for example, right,
Yes.
you don't take that at face value either. Trust but verify, and not that the seller is trying to pull one over. I've been on the other side of that table, and you know what? The seller just doesn't know. They got this spreadsheet from a bank, and so they don't know. They know whatever the bank told them.
Yes.
At best, maybe the seller went through. Well, depending on the seller. I've had sellers where they're trying to give me a Zillow value. And then I have other sellers that actually have done BPOs, and they'll
True.
provide a BPO value. And some don't give a value at all. And so it's anything in between. So you're one of those things you have to check out.
And the caveat on the fact of knowing if it's performing or not, usually is run through the next due date, right? Pay through date, not last payment received, except for the fact you have to make sure, Nathan caught this one really well one time, that the date of the tape is equivalent to today or most recent.
Right.
So the date of the tape or date the information is most accurate is 3 months old, caveat, right?
Yeah.
And the next due date is, 3 months old as well. It's not actually not performing. It's actually performing, and the tape's just old.
Yeah. Yeah. I had that once, and I got really good deals on a few loans because it was just old data. It wasn't that they were not paying. It was just old data. And so I ended up getting a great deal on those, which was happy day.
Yeah. So let's, unfortunately we weren't getting a lot of tapes. We didn't get any assets from people. And those who are curious about sending us assets, know the fact that we're not going to share any other details besides the UPB, the interest rate, the numbers, and the property itself. We can pull privately and get a value, right? I would use my due diligence portal to pull that information out, finding out the last listed price, all information. If it's foreclosure, I would get that information from that. I don't want to know who the seller is. We'll grab your name just so we know who it is. However, we won't ever reveal your name, because if you're in the middle of that deal, we don't want anyone knowing about that. Right. So in terms of the address, we'd only leave it for valuation. We would not give it out.
Right.
As long as you're comfortable with that, we would be willing to break down the deal. I would think that, we would even close out the fact that what city it's in, so no one knows what kind of deal it is, where it came from. Because it's not about the deal, where it came from details. It's about breaking in the numbers, right?
Yeah.
So,
We'd love to see what deals you're coming across and help you evaluate them.
Yeah, and we're not trying to steal anything.
No, and you talk to any note investor and they will tell you everything you want to know except that one thing. That's the only secret in note investing is where you get them.
Yeah.
So that's taken very seriously.
Yeah. Yeah. And because if you have a great source, we're going to beg for it, but you better not give it up, right? That's the whole point of it. That's the only caveat that we don't share. And me and Nathan's done this off air, which is really cool, right? And we see things differently. So we wanted to show a screen. Let me make sure I can bring it up correctly. And this will kind of show you an idea of what we're looking for. So I'll have the chat open for those who are curious, and then we'll go from there. Make sure the chat's open. Okay. So I'll keep the chat open. If we have to unmute you, I will, but we'll go from here.